What is up, and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at the stock market as well as other macro charts and indicators. Let's start off with fear and greed. And as you can see, we are getting back up in the greed territory. Government shutdown aside, that has been bullish the last couple times for the market. Maybe we're getting a little bit of a pullback. You saw it click down in the neutrality real time. So we'll see what this is about. As far as crypto fear and greed, getting finally back up in the greed territory. You can see that as we take a look at over the past year, we did have that recent downtrend, but I would say this to me looks pretty convincing of a break of that downtrend. So maybe we're at a peak, could get a little bit pullback and then start challenging those extreme greed areas. Now, we've been talking about this for a while, how the summer had a nice pump, and this is a very similar chart for the S&P too. But then we get a little bit of chop until October, and then October can be a good time to, late September or October can be a good time to find a bottom, and maybe that is what we're seeing now. Now, as far as what the government's doing and all this and that, something I want you to remember is that the Fed has just started a new rate cut cycle. Now, it's not included on this chart, but we had a rate cut cycle in 2024, and that one was an average of 25 basis points. When we are getting an average of 25 basis points, that tends to be bullish for the near medium term for markets. And Jerome Powell, the head chairman of the Fed, even said that they would not cut by 50 basis points unless it was more of an emergency type situation, which you see reflected in the market there. So I think Jerome Powell is just further sort of solidifying what we see with these 25 basis point cuts. And I think we are still bullish as far as the market goes. Now, next year is the second year of the presidential cycle. So do be aware of that maybe if we are pumping into the top of this AI bubbles, so to say, that maybe that top could come later this year or early mid next year. Now, this is a chart I do think it'd be important to screenshot, and that is after this cycle finishes pumping, after that euphoria, which I hope you are smart enough to take profits into where you can, that on average, I want you to notice how rare some of these pullback opportunities are. And so when they do happen, we have the crypto cycle that tops on average every 4 years, bottoms every 4 years too. We have the yield curve on inversion. Unemployment is getting close to that level. So when you get these average levels and pullbacks, just see how rare those opportunities are. So, if this AI bubble finishes topping out sometime within the next year, and then we get that massive pullback or crash, and you see the S&P down 40%, 30 to 50%, whatever, and the sky's falling, the dollar's dead, all this and that, that's probably the good time to buy when there's max fear in the market. Now, our Schiller PE ratio has finally clipped 40%, or not percent, but just 40. And we've been comparing this structure similar to that of 1998 in the dot-com bubble. And you'll see there in 1998 that when it finally clipped 40, that was about in January of 1999. And the market still had a little bit of ways to go. We'll talk about that in the charts as well, as far as timing and percentages. And let's get to that, by the way. So here's the chart. Let's go back to 1998 because there is so many comparisons with the dot-com and AI bubble. So we'll find our measure tool and look for January of 99, which is right here. And by the time the market peaked, I want you to notice that there's a little over 400 days. So we'll move that forward. I don't think timing is a great skill to use to measure every move, but there's a couple things going on here. So it took 400 days. We still went up by about 25%. So put those numbers back of your head, 425. But I want you to notice how this 50-week moving average kind of signaled when that top was in. So if we go up another 25% of the market and start to break under that 50-week moving average, that is typically the dividing line between being bullish and bearish. There was that pullback. We did have a recent pullback because of tariffs, and that was right at the 100-week moving average as well. So, let's take a look at this. What if we had another 25% move from here? Where would that put us? Well, funny enough, that would put us right at the 2618 at around or just a little bit over an 8,000 S&P 500. I want you to think about that. We've been talking for a while on this channel for the last year about a 7K S&P 500. An 8K S&P 500 would be right at this 2618 fib extension from high to low. Or at least I believe that's the 2618 fib extension. Let's take a look. Make sure our fib is off log. It is. So yeah, that is the 2618 fib extension. Now, as far as 400 days, give or take, let's see where that would put us. That would put us right around 400. That would put us all the way into later next year, November of 2026. So does it have to be 400? Could it be 350, 450, 500? Sure, whatever. As far as timing comparisons, I don't think it's always the greatest metric. But an 8K S&P 500, that would be near the upper end, by the way, of this channel. Let's take a look at this real quick. Since the great financial crisis, we've seen the stock market, the S&P, in this channel as far as the highs and lows. So that 2618 8K move, I mean, there's some things that show that could be a target. So, does it have to happen? No, but do be on the lookout for that. We do have a low VIX, so right now that is good as well. By the way, sorry to talk about the S&P so much. Did want to talk about this MACD as well, the moving average convergence, divergence, and how this, even on the monthly, is trending upwards. So that tells me there's a lot of room to run. All right, we can get rid of that. Let's go to the VIX again. This is very bullish underneath all the weekly moving averages. That is looking good. This is the percent of stocks above their 200-day average. Let's go to the daily here. MMTH is the ticker. You can see it's right at 59%, and we are bullish. This thing has gotten through all those resistance areas, which are now support. But I want you to look sideways. Once the percent of stocks above their 200-day average are getting to be around 70, that is definite take profit area ever since January 23. But if we get really euphoric like 2021, this could go up as 90. So I know it's a big range, but 70 to 90, that the market is truly in a bubble. This is the United States Central Bank balance sheet. I have been watching this one to see the USC BBS, to see if the Fed is going to pivot here from quantitative tightening to quantitative easing. Last time the Fed pivoted, it was when we hit the 100-month moving average. We are right at the 100-month moving average right now. We didn't spike to it, and from it, did sort of a quote-unquote trigger word, soft landing. Remember when that was the terminology? As soon as people are celebrating that's my cat's feeder in the background, apologize. As soon as people start celebrating, soft landing, recession canceled, and there's euphoria, that's probably when we are for sure going to, truly be near the top of the bubble. So people think we're in a bubble now, but I think there's still a little ways to go. Maybe around a year or so. This is the yield curve on inversion. It's been hitting that 200-month moving average resistance, but do notice when yields are spiking, that is when we've had corrections in the stock market. We can overlay the S&P here at the chart as well. So yields spiking, when we uninvert, we typically see bottoms and crashes later on. Yields haven't quite spiked yet. You do notice how the market went down as yields went down. I'll have you keep in mind that's because inflation was spiking, and when inflation's been spiking, that has signaled bottoms as well. So make sure you have one of these yield charts that you can do the 10-year minus 2-year or something else, but I do think that is important to watch the yields as well as inflation. We'll take a look at inflation quick. The unemployment rate, I don't think they've released that data yet because the government shutdown. So would be curious to see what happens. Is unemployment going to come up higher? The market's been pumping since the shutdown, but if all of a sudden, everyone's getting back to work in the government next week and they release unemployment and it's bad, maybe this pump is preceding some sort of a pullback. I do wonder about that. It is suspicious. Unemployment data is one of the best pieces of data as far as calling where those market bottoms could be. You can see how they're very inversely correlated. Let's take off the moving average here so it's clear. So yeah, we could inverse the unemployment data, and it would match up pretty well. So do watch if this starts to get. I think the number would be around 4.6. Get there, I'd be very worried about the market. Let's take a look at inflation, and I just wanted to show you this one as well. Take that off log scale. So you see how this inflation peak was pretty close to that 22 bottom. Let's go back to the 70s, last time there was big spikes in inflation, and you see how these spikes were close to the bottom. This spike in inflation was kind of close to that local bottom, but then there was another bottom that came here in the SP, but then it just kept spiking upwards after that. So maybe after all the strikes and everything for people's wages to keep up with how much inflation has devalued their dollars, eventually the market just pumped. And I kind of see some of that returning, strikes and things coming back. Let's take a quick look at crypto. Crypto, my God, doing fantastic recently. And let's go to the daily to really get some perspective here. So a couple bullish pieces of news. So we have this inverse head and shoulders talked about, broke above it, came down, formed this channel. We are out of this channel and above that trend line. And, Bitcoin is looking very close to where that former all-time high was at around 124.5. So do keep an eye on that. Bitcoin dominance, the total percent of money in Bitcoin. It did hit the 618 fib as support. You want it to break down for alts to do well. Came up, it ran into some resistance. Remember, we're talking about this sort of opposite for alts. That would be technically a resistance here, this support, but good for alts as we go down. If we move back out, you can see bullish Bitcoin dominance and maybe that 60% here around that moving average. All right, let's get into some individual stocks. By the way, mining stocks, it refreshes. Look at that. Miners doing very well as far as the top miners are concerned. Cypher starting to pump now. Iron's still the top dog. And, waiting to see Mara, the second largest holder of Bitcoin. Waiting to see that one truly pop off. That was number one for a while. But mining stocks looking good today. Let's get into the stock market. NVIDIA looking good on the weekly. Let's go to the daily. Daily, we have this 1618 fib extension. We expect to see some profit taking right at around 194. So, that could be a good level to watch for right there. See what happens. Maybe it comes back down to the 50 before blasting off. But NVIDIA, the top stock, is at 4.53 trillion. Back when NVIDIA was at around I want to say 3 trillion market cap, we had this dip back here, and I think NVIDIA was around here. We chopped sideways a little bit and went up, down, and now we're truly blasting off. So NVIDIA, if you're lucky enough to get it down here, remember there was a stock split, since I think somewhere around here. But if you're lucky enough to get NVIDIA down there, you are doing very well right now. Let's add on our MACD. And you know what? Let's take off the moving averages. I think we're going to be above those for most. And let's add on an RSI indicator. Both those looking very nice. Now the MACD is coming down a little bit. We are overbought, but I do think it still has strength to get to that 1618 level. All right, let's start moving a little quicker here. All right, this is the chart for Microsoft. Hit from this high to the low, there is this 1618. But if we zoom way out and we go from the high to low from 21 to 22, we do have a 2618 extension right at 568 there. I'm sorry, I'm going to have to delete one of these. There's too much going on. We do have a 2618 at 568. Look how nicely Microsoft hit this. We are on the daily. Let's go to the weekly. The weekly is still a little bit negative for Microsoft. So I would like to see that start to flip up, and I think Microsoft could do very well. Let's extend out our fib a little bit. We've had a little bit of time. We're going high to low for these fibs. I hope you see high to low. High to low fibs are off log. Hit that 1618 around 544. I'm sure there's a moving average that we bounced off here for Microsoft on the daily. Yeah, that's the 50-day. So get through there. Watch 568 for good profit taking. All right, let's go to Apple. and Apple revisiting former all-time highs. And if it gets through there, the 2618 is at 278 right there for Apple. So there's a price target for you. As far as Amazon goes, there was some bearish news with all the immigration crackdowns as well as AI replacing jobs and such. So Amazon been a little bit choppy, but it hasn't gotten quite to that 200-day moving average. It's still bullish. If it does continue to spike down, I think there's going to be buyers at around 210, and you can see this golden pocket here. We have another fib drawn high to low from the recent spike here. Hope you see that. And we have that golden pocket in the 50-week moving average right at around 210. So I think there's going to be buyers there if Amazon gets to 210. Google, this is why fibs rock, man. Google high to low right at the 1618 at 248. You see it run into resistance there, kind of like Microsoft a little bit. The macro 2618, again, 21 to 22 high to low, is at 261. So not too far off from some possible price target areas for Google. Let's fix this macro fib. I think a lot of these fibs, man, are showing very similar type things. Let's fix this one up. We'll get that exact to the bottom. All right, a lot of these fibs are kind of similar. Seeing similar stories. Google, Meta, Microsoft. Meta, yeah, it's coming down to the 100-day. I mean, that's fine, though. Meta really likes that 20-week moving average, and it hits it quite a bit. And I think if right here, it could get a bounce. We've been looking for $860 Meta for a while, and I think the next leg up for the market, Meta, its market cap, it has room to go. So this would be one I'd be looking for. And, as far as these Mag 6 stocks, I do separate them from Tesla. I think, what's interesting to me as well is if we take a look at the financials and their PE ratios. I've always found this interesting. So we have Meta here, lower market cap, 1.8 trillion. The PE price earnings ratio, PE ratio, that's what that means, is at 26. Google was the lowest for a while, is in the low 20s, and that started to spike. 3 trillion market cap, 26. They just had good news as far as the lawsuit was about breaking up its browser from Google. We knew that never was going to truly take place, but once that news was confirmed, this one is pumped. Amazon, a little bit over 2 trillion, 33 price earnings ratio. Apple, it's up there, but I mean, you pay more premiums for Apple, almost getting the 4 trillion, higher P ratio. Microsoft similar, so is Apple, and then Nvidia. I mean, my God, this is the leader for the AI bubble. Again, I don't think we are at the peak of the bubble, in my opinion, but yeah, that is something to keep an eye on. All right, let's get into some of my other favorite stocks. Let's take a look at Tesla. And Tesla, this thing was, let's clear some of these out a little bit. Turn on the volume there. There we go. Tesla, it was hitting that 50-week moving average right in that 382. I was wondering if it had come back down to that macro 786 and 50 around 300. But these higher lows, after about 3 higher lows, I think this would show even better on the daily. Let's fix this too, by the way. There we go. All right. As far as the daily is concerned, you can see it's right in that 200-day. But, I do like these wedges, these wedge patterns when they show up. So we had the higher lows, the lower highs, and once this thing broke up, it's just riding those daily moving averages, came all the way up here to this micro 888, came down to the 20, and we are right near the all-time highs for Tesla. So Tesla, if this one is to turn very bullish and hit its 1618 extension, curious where that is, right in that channel area. The 1618 is at 608, right in that channel area. So if Tesla can break this all-time high, I do think around 600 would be a good area to watch for Tesla. The micro 1618 is at 660. So somewhere in there, that's right where the channel is. I think there's going to be good profit taking. Let's take a look at Some other very risk-on stocks, Palantir, I'm sure you've been hearing a lot about them recently. Palantir right at its former all-time highs, coming down as again to get support off this 50-day moving average. Now, this fib we have drawn low to high, hit the 236, but it just continues to rocket up. But yeah, Palantir, speaking of P ratios, this one is just beyond stupid. we were talking about the 20s to 50p ratio. Palantir has been at 600 for a while, so this one, it's definitely at a premium. Again, the market cap, I mean, it's 400 billion. So hey, if you believe this could be a $1 trillion, $2 trillion stock, yeah, maybe you could get some multiples in there. But with that much of a PE ratio, I would be a little bit concerned or just cautious. Let's take a look at Coinbase. Coinbase doing, it's getting back to its 88. That's not quite the 888 because our fib's off log. Let's fix that. Well, actually, it's going to be above the 888 actually. Anyways, so, the 1618 is at 667, the 2618 at 1067. If all of a sudden we see Bitcoin getting towards that 150K level, which I've been talking about for a while, 150 to 200K, I think this would be a realistic level. 150K, maybe we see coin get up to here, 200K up to this level. But yeah, it needs a break above its all-time highs, but it's waiting for Bitcoin to do it. If we see extreme greed return, these crypto stocks can get very stupid very fast. Let's go to MicroStrategy. We were talking about how it's at a nice level at the weekly, the 50-week moving average, as well as the 382. And wouldn't you believe it, right at that 382, let me show you how we get there. High to low, okay, microfib, 50-week moving average, it is right there. So been talking about MicroStrategy, how if you like it, this 382 level, I mean, even on the daily, sort of did a little fake out underneath it. But yeah, it's come back up. This is going to be a kind of a key level here. You see these daily bits of resistance, 0.5 at 354. So if you can't get through that, I do worry about it getting under this micro 382 and possibly being lower. And something to remember is last cycle, when MicroStrategy topped, it was before the Bitcoin top by a few months. We had the alt season in April, May, and then there was a second top in November. So do be wary about that if that sort of a thing is going to repeat for MicroStrategy. Anyways, I think that does it for today's video. Let me know what you think in the comments below. Hope you all enjoyed, and have a wonderful Friday. Take care.